Welcome back to the channel. I'm Algabot, and today we're breaking down a pure price action expert advisor for MetaTrader 5 called the Displacement Order Block Retest. This is an institutional, smart money style strategy inspired by ICT concepts, and what makes it special is that it uses no indicators at all. Every decision comes from raw candle geometry. By the end of this video, you'll understand how it spots an impulsive breakout, how it marks an institutional order block, and how it patiently rests a limit order to catch the retrace. Let's dive in and explore the logic together, step by step. Let's start with the big picture. The Displacement Order Block Retest is a strategy that thinks the way large institutions are believed to think. Instead of chasing price after it moves, it waits for the move to reveal intent, and then it waits for price to come back to a specific zone before committing. It is a pure price action system, which means there are no moving averages, no oscillators, and no lagging indicators anywhere in the code. Every single decision is made from the shape and position of the candles themselves. The core idea comes from the ICT school of thought. The premise is that institutions accumulate their orders inside the last opposing candle before a powerful, impulsive leg that breaks market structure. That last opposing candle is called the order block. Because not all of those large orders get filled in one push, price very often returns to that block to fill the resting orders before the trend continues. This strategy is designed to anticipate that return. It can be applied to any symbol and any time frame in MetaTrader 5, though traders often favor liquid markets like major foreign exchange pairs, indices, or gold, where displacement and structure are clean and readable. The strategy works on whatever primary time frame you attach it to, acting only once per newly closed bar, so it stays calm and deliberate rather than reacting to every tick. In terms of who this suits, this is a tool for the patient, structure-focused trader who values precise, tightly defined entries over frequent action. Because it places resting limit orders inside a refined zone, it aims for entries with small, clearly measured risk and an asymmetric, fixed reward target. It is not a high-frequency scalper, and it will sit on its hands when the market is choppy and indecisive. Remember, everything here is for educational purposes only. We are studying how the logic works, not making any promise about results. Now let's walk through exactly how the strategy makes a decision. Everything happens once, on each newly closed bar of your chosen time frame. The forming candle is never used for signals, which keeps the logic clean and repaintable free. First, the strategy measures recent volatility. It looks back over a set number of bars and calculates the plain average range between each candle's high and low. This average range becomes the yardstick for what counts as a normal move versus an explosive one. Second, the strategy detects a break of structure. It scans a rolling window of recent bars to find the highest high and the lowest low, excluding the candle that just closed. A genuine structure break means the most recent candle closed beyond that swing extreme. A close above the prior swing high is a bullish break. A close below the prior swing low is a bearish break. Notice it uses the candle's close, not just a wick poking through, so it only respects clean, committed directional shifts. Third, it confirms displacement. The breakout candle must be genuinely impulsive. Its total range has to exceed the average range multiplied by your displacement setting, and its body has to dominate at least half of that range. Weak, indecisive breaks with long wicks are simply ignored. Fourth, once a valid displacement is confirmed, the strategy hunts for the order block. For a bullish break, it walks backward to find the most recent down closing candle. For a bearish break, it finds the most recent up closing candle. Crucially, it uses only the body of that candle, from open to close, not the full wick range. That gives a tighter, more refined institutional footprint. Fifth, the strategy places a resting limit order inside that block at a tunable depth. A depth of 0 sits at the near edge, a depth of 1/2 sits at the midpoint or consequent encroachment, and a depth of 1 sits at the far edge. This lets you trade off fill rate against price. Finally, risk is defined by structure. The stop loss sits just beyond the block's far edge with a small buffer, and the take profit is set using your fixed reward to risk multiple. If price never returns, the order simply expires after a set number of bars, and the strategy never stacks a second order. Let's read through the code as if we were sitting in MetaEditor together. At the top, we have the input parameters, the dials you can turn. Swing look back controls how many bars back the strategy scans to define the swing structure, so a larger value demands a more significant break. Average range bars sets how many candles feed the volatility measurement. Displacement multiple is the impulsiveness filter. Raising it forces the breakout candle to be larger relative to normal, giving fewer but stronger signals. Entry depth decides how deep inside the order block your limit order rests. A smaller value catches price earlier near the edge, while a larger value waits for a deeper, better price at the cost of fill rate. Stop buffer PCT adds a cushion beyond the block. Risk reward sets your fixed target multiple. Expiry bars cancels a resting order that never gets filled, and lots fixes the trade size. Now the signal logic. The code first measures the range and the body of the just closed candle. The displaced flag is true only when that range exceeds the displacement multiple times the average range, and the body covers at least half the candle. If it is not displaced, the function simply returns and does nothing. For a long, the code checks that the last close is above the prior swing high and that the candle closed up. It then calls find order block to locate the last down candle's body, giving the low and high of the zone. It computes the block height, then the entry as the block high minus the entry depth times the height. The stop sits below the block low by the buffer. The risk is entry minus stop, and the take profit is entry plus reward times risk. Finally, only if there is positive risk and the current ask is still above the entry does it place a buy limit. The short side mirrors this exactly. Let's bring this to life on the chart. Watch the left side first. Price is drifting sideways, and one small down candle forms. That candle's body, shaded green, becomes our bullish order block. Then a large bullish candle explodes higher and closes above the gray swing high line. That is our displacement and our break of structure. Its body is big and dominant, exactly what the filter demands, so the strategy arms a buy limit resting at the chosen depth inside the green block. Now price pulls back, drifting down into that order block. On the fourth candle, the low dips into the zone, and our buy limit is filled, marked here as the buy entry. From there, price respects the block, turns higher, and rides the trend upward until it tags the take profit level on the sixth candle. That completes the long trade, entered with tight, structure-defined risk and a fixed reward target. Now watch the right side for the mirror image. Price has pushed up and a small up candle forms near the top. Its body, shaded red, becomes our bearish order block. Then a large bearish candle drops hard and closes below the gray swing low line. That is bearish displacement and a downside break of structure, so the strategy arms a sell limit resting inside the red block. Price then retraces upward, climbing back toward the block. On the 11th candle, the high pushes into the zone, and our sell limit is filled, shown as the sell entry. The block holds, price rolls over, and the downtrend carries us into the take profit on the 13th candle. Notice how in both directions the strategy never chased the move. It waited for displacement, marked the block, and let price come back to a precise, pre-planned entry. And that wraps up our breakdown of the Displacement Order Block Retest Expert Advisor. We saw how this pure price action strategy measures volatility, waits for an impulsive displacement candle to break structure, marks the body of the last opposing candle as the order block, and then rests a precise limit order to catch the retrace, all with structure-defined stops and a fixed reward target. Remember, this video is for educational purposes only and is not financial advice. Always test any strategy thoroughly on a demo account and understand the risks before going live. If you found this helpful, please hit the like button, subscribe for more MetaTrader 5 strategy analyses, and drop a comment telling me which strategy you'd like me to cover next. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.